let's take a look at the Asian markets. Well, they are largely mixed despite the weak handover that we got from Wall Street.
The company has reported losses for every single quarter since its merger.
Gap area, where's the resistance? If we do get that bounce, it's around the 22,240 to 22,500. It's a big gap area.
And one of the strong points of the anchor book is that the allocation to hedge funds is less than 5%.
So 22,200. So we are into the lower end of that gap area with this start.
Because we definitely need to create additional infrastructure. It's not just incremental infrastructure.
So we had a very good fourth quarter as well as full fiscal year where business was able to deliver on most metrics.
In the green after 3 consecutive days of losses, the Nifty and the Sensex up by a smidge.
The management has given a very bullish stance as far as the combined ratio is concerned. They've said by quarter 4 FY25, that is exactly 1 year from now, they expect to reduce combined ratio by another 50 basis points.
All 39 seats in Tamil Nadu are going for polls tomorrow. This is going to be a 3-cornered contest between the ruling DMK, the AIDMK and the BJP.
There's been such a sudden market fall that we've seen from the highs. The Nifty, which was up around 160 points, is down 11 points as we speak.
Well, that was a wrap, and really what mattered in that wrap was the last 1 hour or so, because everything has changed. And how? This is Closing Bell. We are coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Reema and Mangalam is with us here on the program. Guys, hi, good afternoon.
Good afternoon. You said that what mattered was the last 1 hour, because before that everything has changed. One doesn't know what happens in the next 1 hour as well, given the sort of volatility that we've seen, and we'll also have the Nifty expiry play
Weekly
out.
options expiry. Oh, absolutely. Midcaps, though, are holding up in the green.
You know, a lot of people are asking on Twitter, social media, what happened? I mean,
what happened?
150 odd points sell-off, right?
So what happened?
I made a few phone calls. I mean, of course, no, everyone is searching in the dark, but I think it has to be a mix of a basket and algos. I mean, more than anything else. And I think the role that algorithms play in the market, I think is, you know, we talk about institutions, we talk about the power of retail, but algos is a very large segment now. And it just kind of, the reaction, how fast it happened, right? I mean, it's essentially 8 minutes that we're talking about. That's it. Where all this played out. So 127, it started in 1 minute. So that those 8 sort of wild minutes, 127, we were at a certain level. 128, we were down 150 odd points. And then almost immediately the bounce started, which was not as sort of sharp, or it didn't happen in 1 minute. It took 7 minutes, but then we rebounded 160 odd points or so, which gets us to where we are now, because not very much has happened since those 8 minutes or so. After 135, if you look at what the Nifty has done, it's been absolutely unchanged. Flat is what we have. So, you know, that's the picture. I mean, similar kind of reaction in the Nifty bank as well, almost similar. The magnitudes and the number of points, of course, will differ, but started at that point. There was a sharp recovery there, and then, of course, not very much going on right now, just about a 0.25% lower on the Nifty bank. So very different, very dramatically different as compared to how we spent the first many hours of trade today.
Well, there's no waterfall decline in the Midcap index, but we have slipped about 300 points from the day's high when it comes to the Midcap index, though it's still holding up in the green. That's up close to about 0.5%. Metals is your best performing sector. The Nifty Metal Index is up nearly 1%, with names like Hindalco, Tata Steel seeing gains between 1 to 2%. IT is holding up in the green, not by a whole lot, but up 0.3%. But TCS and Infi ahead of numbers, is seeing some strength. And Telecom, clearly Telecom is the sector to be in the large cap space. Bharti is your top gainer. Outside of that, Indus Towers, Bharti Hexacom. We don't have too many, you know, listed telecom companies, but all of them are doing well.
All of them doing well. But, you know, it's interesting because one wonders how much of it has to do with the technicals of the market as well, where Nifty for, you know, 2 occasions in today's trading session itself saw some resistance at the 20-day moving average, which was closer to that 22,300 mark, 22,284 to be precise. And now it's below the 50-day moving average as well, a level where it saw some support in Tuesday's trading session and now has broken that as well. It's just below the 50-day moving average for the frontline index. The Nifty Bank too is below its 20-day moving average. You spoke about the telecom space. Even some of these mid-cap IT names, Just Dial, for instance, has definitely been the stock of the day, with a 13% up move, strong management commentary, good results coming in. A lot of these consumer durable names, heat wave or not notwithstanding, IFB Industries, for instance, up 7%. We're seeing Hitachi Energy up around 7% as well. And a bunch of these other names doing well, the kinds of 361 Wealth Management. And as we speak, at the bottom of your screen, some news coming in on LTI Mindtree. But the question is, how should you position yourself in the last hour of trade? Mitesh Thakkar joins in with some closing strategies. Mitesh, if the last 1 hour is something to go by, there has been a fair amount of volatility. What does the next 1 hour hold?
I think volatility is definitely going to be part of it. My bigger worry is that, if the bounce backs get sold into, then the structure keeps on weakening. And then therefore we must, prepare ourselves for a test of 21,950. But in a more general scenario, I think the March low of 21,800 should be the near-term target. So stay, on the safer side. Don't feel aggressive in the long side and use rally to build some short positions. I think till we get past 22,350, 400 on the upside, I think this market will see bouts of selling on every pullback or rally. So it'll be a market which will be slightly under pressure. Having said that, the calls which I have, sell on Zydus Life with a stop at about 960 for targets of 900. And PVR is on the buying side. It's doing very well in a falling market. So PVR is a buy with a stop below 1405 for targets of 1470.
Okay, Mitesh, coming to you with more questions in a bit, but thanks for that. Now, HDFC Life has just reported numbers for the fourth quarter. Remember, life insurance companies are yet to report numbers, the monthly numbers. We didn't have the March numbers, but of course, now we have the quarter figures. And Yash is here to detail that out for us for HDFC Life. Yash, take it away.
Well, Prashant, as you said, monthly numbers were not available, and hence a lot of estimates on the street were not available to compare these numbers. But we'll strictly compare these numbers to what the management had guided for the financial year 24. Now, as far as the quarterly results are concerned for HDFC Life, the results are below expectations. They're weak as far as the total annualized premium equivalent or total AP is concerned. That has come with a cut of about 8.5%. The number which has come is 4727 crore rupees versus 5162 crore rupees. As far as the value of new business is concerned, that has also come lower by about 18% at about 1234 crore rupees versus 1511 crore rupees. Eventually, the margins have also come down to about 26.1% versus 29.3%. So almost about 300 basis point cut as far as the margins are concerned. Now, as far as the full year guidance from the management is concerned, in an interview given to CNBC-TV18, the management had guided that they expect mid-teens growth for FY24 on both annualized premium equivalent and VNB, which is value of new business. On both those counts, the number that we have in our hands has missed that guidance. As far as margins are concerned, the management had guided for about 28 to 30% range for VNB margins. The margins have come much lower than that particular guided band as well.
Okay, thank you very much for that. Prakash Diwan is also with us on the show now. Prakash, HDFC Life has underperformed peers broadly. Say something like, so where would you stand on HDFC Life and the numbers that we've seen?
Good afternoon, Rima. So, yeah, it now explains, we can attribute why it hasn't performed as much as the other 2-3 bigger insurers have. But let's understand the fact that it's something which is not, a secular trend that you need to kind of attribute it to the performance of HDFC Life. This could change in a couple of quarters. This could change if they have some new product that has slightly higher acceptance. And insurance is a very long-term, game. In that sense, you don't really anticipate things just for a few quarters or for even a year or two. You need to look at it more from a secular trend perspective. And I always feel it's always better to go with a basket approach. Take at least 3-4 names, allocate your money equally in terms of what you want to put to the life insurance side, and then you just wait along. So that's what works much better. But I would believe there will be some recovery. It's not something which is absolutely disappointing from a.
Right, I think we snapped that connection. But speaking about connections, it's the telecom space which has been in focus all through today's trading session, and not just today's trading session. Ever since the big FPO for Vodafone was announced and the fact that it is open today, Rima, tell us everything that's happening there right now.
Well, so let me start with Vodafone Idea, where there is the large 18,000 crore FPO, and there are marquee anchor investors who've invested in this FPO. You've got GQG, Fidelity, UBS, in the domestic names Motilal Oswal. So that's given confidence. And I think the street is hopeful that if Vodafone Idea, after a long period of unable to, being capital constrained, is confident enough to go out there and raise the money, the belief is that maybe the cycle is turning now for the sector. What are they betting on? The street. Three things for Vodafone Idea. The first, tariff hikes will come. Two, the capex plans, the growth capital that the company is raising will help in them reversing their subscriber market share loss. And the third one is some relief from the government will be forthcoming. These are the three metrics on which the street is betting on Vodafone Idea's survival, at least in the near to medium term. IFL today has upgraded the stock, target price 14 rupees, and they recommend subscribing to the FPO. The question here is only some people believe that subscribe to the FPO, but as an arbitrage, as a tactical play, and you will get some listing gains in the immediate term and you can flip out. On Industars, a stock which has seen 75% up, year-to-date gains, IFL has again upgraded Industars to a buy rating, target price 375. There are three key reasons here again why IFL is upgraded. Earlier, there was at least some chance that Vodafone Idea may not survive. According to IFL's own estimate, that there was a 25% probability in their fair value that Vodafone Idea will not survive. Now that's gone away. So that key overhang of one of their key clients is gone away. Secondly, Vodafone Idea's capex is a big positive for Industars, and therefore the tenancy ratios will go up. And that will boost the company's cash flow. And finally, maybe after 2 years of not giving any dividends, this company, Industars, can reinstate their dividend payouts. So that's the driver behind Industars. And Bharti Airtel. Now, one would think that if Vodafone Idea emerges stronger, then the market share gains for Bharti Airtel and Reliance Jio will come down. And that is a negative. But the reason why Bharti Airtel is also seeing buying, because the sector will emerge stronger if there are tariff hikes, and two, if there is any favorable verdict from the government, any relief from the government on the AGR dues. So that will not just benefit Vodafone Idea, but it will also benefit a Bharti Airtel, and that's been one of the drivers. And Bharti Hexacom is another one, which is up close to about 8 to 9%. If you could pull that up for you on your screen. That is also a pure play, it's a pure wireless play on India's rising ARPUs. So that stock continues to see buying. Okay, let's continue talking about, Vodafone Idea and hear out. Okay, before
I think we have Prakash with us.
We've connected with Prakash once again. Prakash, which is the best way to play telecom now, the telecom story in India? And do you believe the cycle is turning for the entire industry?
Oh, absolutely. And you can understand, the way calls just drop off. There's so much of an infrastructure shortfall that needs to be filled up. The government's own estimate is about 5G would need about 12.5 lakh towers. We just said about close to 5 lakhs. So, double needs to be done. But, the way everything is positioned, Rima, right now, I believe while Vodafone Idea has seen that bankruptcy risk go away, it's Bharti that's actually getting to be much stronger of getting benefited directly or indirectly. Not only from the perspective of government relief that could, come to aid Vodafone Idea, but it could also kind of help Bharti in terms of its balance sheet damage being averted. And the tariff hike that we've been waiting so long for would probably happen much, and I would be surprised if Vodafone would also want to precipitate a situation where there's a tariff hike. So when the industry starts getting to be profitable, it is a turning point, and it's happened after a long time. So I would believe it's going to be good times for the tower players, for the wires, for cables people, for people who are into digitization and all. But Bharti probably stands out at this point in time as one of the best bets. But of course, it's risen a bit in the recent past, so you need to take that with a pinch of salt. But on dips, it probably offers some great value in the long term as well.
All right, so that's about Bharti. But Prakash, I wanted your thoughts on the auto ancillary space right now and the auto space in general, because today we got a notification on the exchanges for Ramkrishna Forging saying that they've won an order which could perhaps be from Tesla at 400 crore rupees per year for the next 8 years. And this is the first time that they're going and supplying to Tesla or any OEM directly as against third party. Ahead of Elon Musk's impending visit to India, do you think EV as a play could be an important theme for the next couple of quarters at least?
Oh, absolutely. But, I don't know whether Elon Musk's visit to India is going to also coincide with some sort of a manufacturing, announcement related to manufacturing facilities getting to take off the ground yet. Because what Tesla would need is far more depth and, scale. And that would take some time for the environment, for the ecosystem to get in place. But what's working well, and I think it will continue, is there's a revival in very high quality supplies getting more and more percentage-wise being contributed in the global trade on auto ancillaries from India. And look at numbers from some of these players like Sona, Comstar, look at even Suprajit, which is into a very basic, component of the auto ancillary chain. But most of these larger companies will do so well. Look at the Motherson, both the Motherson Sumi companies, Samvardhana as well as Motherson. I mean, they're the kind of contribution to each vehicle is going up so significantly that they will start getting a very well-defined right to win. Right? So I think auto ancillary, the Minda Group, the Motherson Sumi Group, there are so many of them which are doing the right things. You'll start seeing the effect of economies of scale coming to them and pricing power coming to them in the next 6 to 12 months very sharply. Great play. In fact, I'm now more bullish on the ancillaries than the OEMs because OEMs have run up a bit and probably will see a little bit of fatigue except for possibly a Maruti or something. But other than that, I think the ancillary space is absolutely very promising.
By the way, markets have taken a turn on the way down. The Nifty is now down 90 points. When we started the show, we were flat, but with a negative bias. But now it's at the day's low. There you have it in the last 10 minutes. The Midcap index was up 0.5%, now is down 0.1%, 0.2%. And it's banks where we are seeing the maximum brunt of selling pressure. The Nifty banking index is down 1%. And individual constituents, ICICI Bank, IndusInd Bank and Axis Bank is down more than 3%. And HDFC Bank too was up in the green in the morning and is now down close to about 0.8%. So the bulk of the selling pressure is picked up in the banking names as the Nifty is hurtled down now towards a 100-point cut. Prakash, what would you attribute these, what have you picked up from the markets, the volatility, the selling pressure in the last 2 hours that we've seen?
I think, the bank Nifty is still not been able to participate or make that kind of a, contribution to the markets as much as the Nifty has. I mean, you've seen that lag for quite some time. You've been anticipating it will play catch up. The other thing that's happening is most people are not anticipating, the whole anticipation around interest rate cuts in the US and hence in the Indian context also has gone through a little bit of a shift in timelines. And if that were to happen, if capex is to be, more back-ended towards this calendar 24 or even the financial year 24-25, I don't think banks are going to reflect very great improvement as yet on ROAs or credit expansion, margins, any of those key metrics. So there is this anticipation that there's still some time before the banks start getting into a very decisive trajectory in terms of growth. And then once you have this theme where things are not looking up for a sector, especially if you look at it's a private sector bank actually taking the brunt and not as much as the public sector ones, which have their own trajectory of deposit growth and hence disbursement and growth, credit growth and all that. So I would believe it's probably an anticipation of some sort of a stretch on the timelines that's reflecting this. People are very light on portfolios. ETFs are getting lighter on their portfolios. I don't see any reason why you would not want to buy into banks if you had long-term capital. But the ETFs are probably waiting for the election outcome as a turning point or as a decisive milestone beyond which they would be able to allocate. So that's probably what explains this aversion to buying into any of the larger banks at this point.
There's no global, I just sort of looked quickly, there's no global headline or anything. US futures are trading with a little bit of green. There's no other markets which are sold off or anything. And nothing on the geopolitical events or anything of that sort either. So this is just sort of coming off of what's happening here more than anything else. So with the cut that we have, we're of course below Tuesday's low. And Tuesday's low was 22,079. We're at about 22,053, which means that now we're basically broken that 1,000-point up move that we had from 21,700 to 22,775, which was the all-time high. We've broken below the 61.8% retracement, which then gives you an automatic sort of indication. I mean, if this stays and if you close like this, that perhaps slowly, but and it's not very slow, to be fair, we kind of get to the previous, from where the rally started, like a complete retracement, which is, 21,710. It's not very far away. I mean, it's about 300 points away, 1.5% or so away from where we are right now. But that's the indication, and that's not very good. Unless and until we kind of close above this 21,117 level by 3:30 today. So that's the picture on the index at this point. We'll sort of come back and talk more about what's going here and now and whether there are any specific drivers. Not that we've been able to spot any so far. But let's spot some stocks. Just Dial, of course, is up about over 10%. It was up almost 14% earlier. It's reported its fourth quarter numbers, and numbers, of course, are looking good. We had the management with us as well. Rima, tell us more.
Well, by the way, Just Dial is hitting a fresh 52-week high as it's crossed that 1,000 rupee mark. But its all-time high level is 1894. So the stock is still quite some distance away from 1894, which was the all-time high level. Very strong numbers seen in Q4. On the top line, the margin expansion. Margins are now at a 4-year high. Profits have gone up by 38% on a year-on-year basis. But I think it's the management commentary that growth is continuing for the company. On the top line, they're guiding for a 15% revenue growth, lower than what they've seen in FY24, but a 15% growth is healthy. And two, they're talking about continued margin expansion. Q4 margins are 26%, and they're saying it's possible to get back to our historical margin levels of 27 to 28%. And at that point, when they get there, they will decide what to do with the, and if margins continue to go up from there, they will decide what to do with the excess benefits. Will they invest it back into the company in the form of ad spends, increase that, invest in sales personnel to drive growth, or will it be, will it continue to boost margins? But 27 to 28% appears to be in the bag. And this is a company with cash of more than 4,620 crore. You had a chat with the management.
Yep, we did speak with the management. In fact, what we'll do is we'll listen into that excerpt that we, of the conversation that we had with the management. 27 to 28% in the first half of this year itself, with over 4,000 crores in their bank.
Target is to surely have 15% plus kind of top line growth, which would be very good in current environment as far as SME health is concerned. As far as profitability goes, the business has significant operating leverage. And as I mentioned, while we have mentioned that the endeavor is to have 25% plus margins, but last quarter itself, we were at 26% plus. So once we reach that kind of 27, 28% kind of margin levels, we will take a decision on whether to deploy part of incremental margins into advertising, which will boost my traffic and aid my monetization in subsequent quarters and years, or retain it as it is.
Prakash, thank you very much for joining in. On that note, we'll slip into a very short break. We'll come back. We'll invite Abhiram Eleswarupu of BNP Paribas India to talk more about the markets.
The weakness in the market continues. The Nifty is now down 75 points. The Nifty Bank below the 20-day moving average, much below 47,200 as well. But one of the stocks which has actually been lower right from the word go this morning has been Nestle. Now, remember over the holiday, that was yesterday, there was a report that came in from public eye. Their investigation report was on sugar in infant food. So Nestle stock is down around 4%, one of the biggest intraday falls that we've seen in the counter. And what was the outcome of that report was that there was presence of added sugar in the serving that they have for Cerelac wheat, which is the infant nutrition product. And more so, it was more in the low middle income countries as against the developed countries. So the list of the countries comes up for you. Thailand, for instance, had 6 grams of sugar per serving, added sugar that is. Ethiopia around 5.2, Pakistan almost 3, and India is about 2.2 grams. Now, the question is that if there is added sugar, which is not good for health as per Nestle and the UN itself, and there are countries where no sugar product is available, why is it that there is this variant available in countries like Thailand, South Africa, even India for that matter? To that, the company has said that over the last 5 years, they have reduced added sugar by up to 30% in their infant cereals portfolio. They continue to innovate, reformulate products to further reduce the levels of added sugars without compromising on quality, safety and taste. Here again, the question, if there is a variant of no sugar available in UK and Germany, why not for India? CNBC-TV18 has written to the company and they are awaiting further clarification on the same from Nestle itself. How much is this in terms of their overall sales? Milk products and nutrition account for nearly 40% of the company's revenue. This segment includes dairy, whitener, condensed milk, UHT milk, and then infant formula, baby foods, etc. Given their market leadership in this space, even if half of their milk products and nutrition comes in from infant food, then that's about 20% of their revenue, almost as much as what Maggi was when the Maggi controversy erupted for Nestle. But be that as it may, we're not saying that this may balloon into something as big as that. There are a lot of other triggers to watch out for Nestle as well. The first one, of course, next week we have the March quarter results. Secondly, some of their key inputs like cocoa and coffee are surging. Cocoa prices are at a record high. Thirdly, the company has announced that they will look at increasing the royalty that they pay to the global parent from 4.5% to 5.25% over the next 5 years, which would imply an annual increase of 0.15% in royalty. So with margin triggers limited going forward and with this concern coming by, along with the outperformance that we've seen in Nestle, maybe the street thought it's best to perhaps stay away, and as a result of which we're seeing a 4% decline.
Absolutely, and something that needs to be watched going forward, as Mangalam said, it's not saying that this is going to balloon into something that we had with Maggi earlier, but certainly worth keeping an eye out on, and some of the other factors as well, which perhaps go into the mix for Nestle. 4% lower nearly on that stock. Abhiram Elasurupu is with us, Head of Equity at BNP Paribas India. Abhiram, great to have you with us here. Thank you very much. Any insights from your dealing room on what's happening with the market since 1:30 or so? Bit of a roller coaster.
Yeah, well, I did hear what you were saying, and I think we did the same checks, which is to look at the news from the geopolitical side, US futures and all of that. And frankly, we think it is a localized issue. It just could be the case of one or two large sellers, but nothing specific that we've come across either. It's at the end of the day, intraday moves do happen, and not each one of them kind of sustains.
Yeah, no, got that, absolutely. By the way, Abhiram, with the earnings now also in full flow, just wanted to get a quick sense on tech earnings. We'll put out a preview on Infosys in just a bit. Rima will do that, but we have numbers from TCS. And since then, there's been a general the mood is a little bit down as far as the sector is concerned about what can happen. Infi in particular, going into these results, is down about 17-18% from the last quarter levels. Do you think the risk reward sets up in a more favorable way as compared to TCS here?
Yeah, I think I've kind of been maintaining through the year so far that, the move aside of the down move over the past few days, like you mentioned, I think the triggers are still set up for a positive return from here on. And, a sell-off like this usually is followed by a recovery. Now, I think what's really set this off is the fact that, commentary around discretionary spending has not been positive. In fact, companies have still sounded cautious, those who've spoken so far. And the reality is that almost all of these companies are sitting on very big order books. It's therefore a question of when rather than if. And so I would think that as the commentary starts to improve, may not happen during the this quarter simply because they have to give out a full year guidance of some sort. And usually companies tend to be a little conservative to start with. But once we look beyond that, I think the triggers are probably positive. Risk reward is probably positive rather than negative from here on.
Abhiram, from the last time we spoke, this is a general question across sectors. What has changed on the ground? What do your channel checks suggest? Is there a new opportunity which has emerged? Are there sectors where we are seeing increased headwinds?
I think between now and then, really, the ground-up data has still been very strong. And therefore, nothing really has changed around that. And I think the last time we spoke, I did maintain that there's really not a massive negative trigger up till at least the elections. What's changed between now and then is that the possibility of rate cuts, especially in the US, have been pushed out. And therefore, as a House, we've taken a call that rather than have 3 cuts, we'll probably have 2 for the rest of the year. And that's what seems to be priced into the fixed income markets as well. So that is the number one kind of thing. The number 2 aspect is, of course, the geopolitical risk around Iran and Israel and therefore the impact on oil prices, which again, if we think is not escalated to a significant extent, then is still somewhat manageable. So the reality is that between then and now, we haven't had a lot of positive news come out, but we've had some negative news come out, and that explains why there's general nervousness in the market at the moment.
There's a fair amount of nervousness indeed, Abhiram. In fact, one would have thought that the elections being a foregone conclusion, the markets would go only one way up, but turns out there are a fair amount of, volatility inducers, so to say, from the global areas as well. So in this decline, in this nervousness, if you were to buy something, what would it be?
Well, again, if we take a 12-month view at the very least, and maybe a little longer than that, then there are 2 elements from an India perspective. First is look at the structural element where, obviously, I mean, after all our recent meetings with investors, the one thing that does come out is the structural positivity that investors have on the country. The expectation is that there will be policy continuity going forward, but also the fact that India's standing at the global level is rising, and that's what is leading to lower risk premiums for the country, and therefore that positive structural element will continue. The second aspect is obviously the cyclical part. Now, given the fact that elections are probably the biggest trigger for the rest of the year, and once that event is done, I do suspect that there may be some amount of profit taking. And that again will probably lead to more buying opportunities from the long-term perspective. Now, in those, if you look at it, the market texture is rather similar to last year, where the leaders are still the leaders, that is realty, autos, etc. And the laggards are pretty much still the laggards, which is financials and IT and so on. So I suspect that after this election catalyst is over, there will be some flight to quality. And that is when I think that banks and IT will start to recover. And that's when the fundamentals also will meet this, because you'll probably see the last of the margin pressure for banks by then, and also probably improved commentary from IT companies by then. So I think that could be a critical moment in the market.
Abhiram, India's dance with democracy begins tomorrow. Phase 1 of polling starts across various states. How do you expect this time elections to impact markets? In the run-up till we get the verdict and even post?
Well, normally, and if you go back to the various elections that we've had over the last 20 years or so, you've normally had a rally before the elections. And I do not see why this time should be vastly different. Of course, this time each time is different, and you do have some geopolitical risks and so on. But India is still seen as the place for growth. And that conviction has only increased in the last month or so since all our meetings with investors. So I think that the case for a rally is probably stronger than a correction before the elections. It may not, I really don't know how big a rally that would be. Now, once the elections end, I think investors will sit back and start to look at where are the numbers. Now, if we take valuations today at 20, 21 times, it really does not leave a lot of scope for upside, right? Our target is 23,500 for the Nifty, which means we're looking at maybe a 6-7% upside through the rest of the year. And that's when people stop and say, okay, let's get a little more sector specific, a bit more stock specific. And I think we'll start to move along those lines once the elections are over.
Right. Abhiram, just before we let you go, would you have a word on some of the mid-caps that are there right now? In fact, as we speak, the mid-cap index has moved to the low point of trade, has taken a sharp turn for the worse. And if you just pull up, the intraday chart of the advanced decline ratio, you'll see that stocks that are declining have now gone above the stocks which are advancing. So the crisscross lines have actually crossed past, and now we have around 1200 stocks. Okay, there you have it, which are declining, for about 1120 stocks which are advancing. Are there pockets of value emerging in the mid-cap end of things, or you would be capital agnostic?
Well, broadly, we are capital agnostic. If I had to pick in terms of caps, I'd probably pick large caps. Now, that said, the mid-cap index is actually a vast index in terms of the options available. There are many, many companies and sectors represented. For example, most recently, one of our reports was on ports and logistics, an area that we really like. And that's a space which has a lot of mid and small cap companies, in fact, mid-cap companies. Area that we are quite positive. We like consumer durables quite a bit. You see like they say, the summer is hotting up, and it's not a bad time to look at that space. Some areas, especially around hospitals. These are all themes that we like. Broadly, anything to do around affluent discretionary spending, and logistics and capital goods and capex and those kind of themes. And the mid cap space actually has a lot of such options. So while the mid cap index as a whole seems to be quite expensive, and that's probably reality well compared to its history, there are several pockets that investors can focus on.
All right.
You want to name a few? I mean, stuff that you guys have written on, what you published?
Yeah, most recently we actually had ports and logistics. We had about 5 or 6 companies around that. Won't go into the specifics of each of them. And also we had a pretty big channel check kind of a report come out around the consumer durable space, more specifically around air conditioners and lighting and fans and so on and so forth. So those 2 areas are ones that we're really working on.
All right. Just a word on the market. Briefly moved below 22,000 for the Nifty, and that's important because it happened just after 3 p.m. So the expiry move happened on the downside. However, it will be very interesting to see whether the market goes and sustains below that 21,985 mark. Why do I say that? Because the 22,000 put has the maximum open interest, around 2.5 crore shares outstanding, and the premium available on that is close to around 15 rupees. So if it sustains below that 21,985 mark for a fair amount of time, then all these put writers will suddenly be out of the money and may have to cover their positions, causing a further fall in the market. So where we are right now is extremely crucial. 22,000, slightly below that, but with a lot of open interest on the short side, the 22,000 put that is.
Absolutely, and this is getting worse, right? I mean, 140 point fall, nothing to be scoffed at. And of course, I mean, if you look at things and how they've panned out from the beginning of the day, I mean, there's a huge big red candle, right? The high was 22,326 and we're at basically 22,000. So 300 points knocked off from the day's highest point. And this has all happened in the last 2 hours, essentially, because 1:30 odd is when the fall started, a bit of a recovery, and then there's a second dip which has happened, which of course has taken us to fresh lows, really speaking. So, not looking great at all. Nifty Bank is the other one. It's down a full near 1%, and that also, by the way, is almost at the day's lowest point. So in tandem, both the Nifty and the Bank Nifty.
Ticker team tells us that it's the first time that Nifty has fallen below 22,000 in this fiscal, at least. That's FY25. And the Nifty Bank also at the risk of breaking below that 47,000 mark.
Yeah, no, absolutely. I think you're basically now looking, Mangalam, at the lows from where this rally started. When I say lows, I mean the March 2024 lows. That correction that we had from the highs in January to the lows of March. So for the Nifty, that is 21,700. The exact sort of low is what, 21,710 is that low. Then we had a straight 1,000 point up move, and we're now getting closer and closer to that level, 21,989. We'll take a quick commercial break here. We'll come back. We'll get you some technical trading ideas. Mitesh will be back with us. We'll have more stocks we discuss as well. Stay with us.
Welcome back. Now, the fall in the Midcap index is as much as the frontline index. So the Midcap index is also down close to about 0.6%. Mitesh is now with us. Mitesh, the fall that we've seen, the accelerated selling pressure in the last 1 hour, what have you made of that? And then your BTST or STBT calls?
Yeah, morning there was first signs that we might actually do some base building. The structure was always weak, but then this is kind of again disturbed that. Though 21,950 is the pivot to be aggressively short upon, but for the timing, I think as I said, this market overall is turning slightly negative. So rally should be used to sell into, except the fact that I didn't realize it would be so fast and it will happen immediately today. But yet I think below 21,950, expect 21,800 to be tested. So the overall bias is on the negative side. Right now, I have a BTSC and one STBT call. BTSC and Bharti Airtel with a stop at 1254. Targets of 1280, 85 can be looked at. And Axis Bank is breaking below support. So STBT position there with a stop just above levels of 1,032, 33 and a target of 1,000 can be looked at.
So if 21,950 breaches on the Nifty, Mitesh, what happens?
So then I think, we should immediately test the March lows of March 19th low of 21,800. And then below that, then the weekly structure will get damaged. So then I think, we'll look at a slightly more prolonged, stronger correction.
Right, Hitesh, thank you for joining in and giving us your call for BTST and STBT. In fact, 21,950, like you said, very close now. Actually, we're now 21,972, much below the 21,985 mark as well. Will remains to be seen what happens to the 22,000 put writers, the 2 crore plus who are still outstanding. Mayuresh Joshi joins in now. He's the head equity research at William O'Neill. Mayuresh, some of the stocks that have been doing well all through the day, one of them has been Just Dial. Then we've seen the telecom stocks do well too in an otherwise wobbly market. What are the things that you like right now and what are the things that you would avoid?
Afternoon, Mangalam. No, absolutely. I think telecom stocks have been on a roll over the past few weeks. And obviously, I think the indications that are coming through is that there will be some element of an ARPU increase in the next few months. And if that probably happens, I think a lot of leverage or the hinging of the earnings growth that takes place for these telecom players, I think that should start improving quite significantly in the next few quarters and the next couple of years, to say the least. Obviously, I think the case in terms of the AQRDUs as well, if there is any positive reaction on that front, that will also have a big say in terms of liabilities coming off the balance sheet. And therefore, I think the expectations in terms of solid earnings growth is something that is keeping telecom stocks probably in the limelight at this juncture. What we are looking at markets with India, obviously, I think are defensives at this juncture. And obviously, with the volatility expected to still continue in the near future, pharma stocks probably stay on the top of our watch list. Within those, I think Sun Pharma, Dr. Reddy's is something that we continue holding on to our global portfolios. But within the mid-cap names, names like Strides Pharma as an example, where the management sounds very, very optimistic for FY25. So if you probably look at how numbers have played out, Mangalam, for Q3, gross margins have expanded quite significantly. We've seen a sharp uptick in terms of EBITDA margins as well. Management is hopeful in terms of getting the cost down quite significantly through their optimization efforts. And therefore, the top line growth for 25 assumed between 15 and 18%, EBITDA growth around 30%, expecting cost optimization and better product launches to actually take the net debt to EBITDA levels from 3 times to almost 2 times in a time frame of the next 12 to 15 months, which can be a huge positive as far as earnings is concerned. The other one also is Natco Pharma on declines. Our take is that the branded generic space is doing very, very well. For Natco Pharma, again, I think the expectations in terms of key FTFs are critical. Management, again, is very, very hopeful in terms of the pipeline that they've probably got. And then for the maintenance of margins around that 38-40%, I think can be given for the company itself. And therefore, I think a good product makes good launches, expectations in terms of the branded generic portfolio expected to hold up and do well. I think that can hold up the earnings pretty well. So I think the EPS RS ratings as we see it at MarketSmith, along with most attributes of the cancel methodology that we follow, are probably coming true for pharma stocks. So I think one sector to watch out for on our watch list is pharma.
Okay, we'll come to the other sectors too. Mayuresh, to stay on, let's focus on Infosys and Bajaj Auto. They will be reporting numbers post-market hours. And starting with Infosys, it's just about holding on to the green line still, but it slipped nearly 2% from the day's high. And this week, the stock has seen a correction of close to about 4.5%. So it's going into its earnings a bit subdued. The company is likely to report a revenue decline. Revenues, according to our poll, should be down 0.5% in constant currency terms, and this would be the second consecutive quarter of a revenue decline. Margins will see a bit of an expansion, so 20.7% is our poll, driving a 1% increase in the company's profitability. Focus on the guidance. The company is likely to guide conservatively. In the past, the companies had to lower their guidance as the year progressed for FY24, so 3 to 5% is the consensus expectations. But other than numbers, watch for continuation of strong deal wins. Watch for hiring. Hiring for Infosys has been declining, the net headcount, for 4 consecutive quarters now. It's a lead indicator of demand. The company had stopped going to campuses also. So, commentary surrounding hiring, attrition will be watched very closely. Deal wins. And finally, on AI and Gen AI, TCS, remember, for the first time has given a pipeline on AI and Gen AI, and they've pegged it at $900 million. So Infosys, do they also share a similar number? So that's on Infosys. But moving on now to Bajaj Auto. Sonia?
Well, thanks a lot for that. Bajaj Auto's numbers are expected to come out any time now, and a good set of numbers expected this time. The stock has had a dream run in the last 1 year. It's up almost about 80-odd%. The stock hit a record high of 9,356 on the 2nd of April. This year. And, the most brokerages are very bullish. In fact, Goldman Sachs recently raised their target price on Bajaj Auto to 9,380. Many things working in its favor. You have a strong volume growth. There's a pickup in the export business. Quarter on quarter, the three-wheeler business is doing very well. The key numbers will come up on your screen. The expectations, the revenue growth of 24%, EBITDA up almost 29%, profit growth of 30% is what we're looking at this, this evening. And if you look at it, the total volume growth has been 24%, led largely by domestic volume growth. But the big pickup really is in the export volume. So export volume growth has recovered to 19% year on year, and margin expansion will also be there because of lower input costs as well as an improved product mix and better operating leverage. Back to you.
All right, Sonia, thanks a lot for that. Mayuresh, Infosys, Bajaj Auto, you heard the expectations. What are your thoughts on the stocks?
So to a large extent, as Rima was pointing out, I think we will wait out for what the management commentary is specifically in the case of Infosys. And obviously, I think if you probably have a stack up in terms of the top tier IT companies, I think where they're probably lagged is expectations in terms of solid earnings growth expected to come through. However, that has lagged because of both the BFSI, the manufacturing, as well as to a certain extent the retail vertical actually not moving to expectations of what analysts pegged, both in North America and Europe. You're seeing some element of green shoots as far as the Eurozone is concerned. But with the expectations in terms of how data points are playing out in North America and the expectations of subdued rate hikes, I think the expectation largely is now getting penciled to around 2 rate hikes from 4 that we've probably seen. A recovery in the BFSI space might be back-ended, probably second half of this calendar year itself, which might again mean that there might be some amount of deferment when it comes to large orders in the next few quarters, along with what probably happens in terms of pricing for these orders as well. So to that extent, I think management commentary is going to be very, very critical. We'll obviously wait and watch in terms of how numbers play out. For Bajaj Auto in particular, Mangalam, I think what Sonia was absolutely mentioning, I think the expectations in terms of a very strong recovery in exports, specifically three-wheeler exports, I think that is something that can give a leg up to the stock. The expectations in terms of the EV portfolio as far as three-wheelers are concerned, and the two-wheeler portfolio through Chetak, where they're expanding in cities and their exclusive stores as well. I think that margin profile should come back to normal. And therefore, I think as the production capacity ramps up, specifically for both the three-wheeler EV ecosystem and the two-wheeler ecosystem for Bajaj Auto as well, I think the kind of premiumization that they probably got, the expectations in terms of margins now holding up, I think that might hold earnings up at this juncture. But again, I think valuation a tad bit stretched at this juncture, trading way above pivot levels. So I think anybody holding on can hold on. For fresh investments, you need to wait for good pullbacks on this one.
Got it. Mayuresh, we leave it there. Thank you very much for joining us. It's a pleasure having you with us here on the program. Let's welcome in Rohit Srivastav now as well. He's joining us. He's, of course, founder IndiaCharts.com. Rohit, good afternoon. Good to have you with us here. The market, of course, is the big story. Starting at about 130, big fall. And, it looked like it would be one of those, like a flash crash, right? A big dip, short-lived, but then prices reset back to where they were before. And it looked like it was panning out that way. And then there was a second dip. So just talk to us about what you've observed. And second, what to your mind is the big dominating driver, the big price signal for our markets from here out? Is it the US market? Is it something else? Go on.
So the main driver here is, of course, global markets, which is being pulled down by US bond yields, right? That is the main problem over here, that the markets are beginning to recognize that we can't have interest rates at these low levels. Some of it may be related to, I think, not so much inflation, but the high growth rate, but also that the US has a large borrowing program. Almost, I think, $7 trillion of refinancing has to happen for the government debt. So that's keeping pressure on bond yields, and that pressure on bond yields, which I think markets or even the Fed was not anticipating or was trying to talk down, is now getting markets to realize that they can't really keep running one way up. So I think that's what is driving the correction. And as long as we have a bond bear market, the fall in equities may not be over, even though right now, as of this moment, I think the current 4 or 5 day fall is getting to a very short-term oversold reading. I thought it would hold 22,000, but even if it's below that, it just gets a little more oversold. So I will not rule out a 1 to 2 day very sharp rebound of this fall, but eventually I think we are headed lower. So that is the setup we are looking at on an immediate basis.
So when you say that not the immediate term, notwithstanding that, markets are in a corrective phase, will it last for how long? Where do we, will it last for a few months? And how low can we go?
So I think in a couple of weeks, we look at initially somewhere close to 21,200 or so. That is going to be the first major support, where we will try to judge whether this is just a routine correction, you lose 1,000 points and bottom out, or is this going to be something bigger? I think that is going to be the determining level. Because if that breaks, then it will be the first time we'll be breaking it, breaking the weekly supports since this rally started more than a year back. So that has not happened. If you're looking for that final confirmation of a major reversal, you'll probably wait for that to break. But if I look at the structure of the market, it does give us early warning signs that this could be something bigger. So in that sense, I would be prepared for things to get, much worse than what we've been thinking. But even then, the final breakdown level will be 21,200, 21,100. Where we'll watch out for. So there's room for it to at least fall till there. So let's start with that much and take it from there.
Street will hope it doesn't go all the way there, for the bulls' benefit ahead of elections. But, the market's trying to inch back to that 22,000 mark, Rohit, with the Nifty bank holding above that 47,000 mark. Let's see where it closes as, the closing settles with the volume-weighted average price. Any individual names that stand out in terms of either an up move or a down move opportunity?
I think there'll be a lot of down move opportunities. What has been happening so far is so much rotation that I've actually been avoiding thinking too much about stocks, because there are some, if you look at tech, like yesterday I just opened up LTIM and it's just consistently falling. So that is the tech sector. And somewhere if it's falling one way, then the tech sector gets oversold and, you start wondering whether that will actually give you a counter trend move against the market. On the other hand, you have banking, which has been a non-participant throughout the year, and can it actually further provide us that room for those opportunities on the short side as far as financials are concerned in general, not just banking, but I think financial stocks overall, because that is where even the interest rates hit the interest rate sensitive sectors. So I would think of shorting financials, autos, whatever gets hurt by higher rates would be the areas of risk.
Rohit, if we kind of let's just look at the other side, right? Is it okay? It's 21 100, 21 200. What you said, right? That's about 3.5% away from where we are right now.
Yeah.
I mean, so it would fall in that quote unquote routine correction category, and we've had those before as well. But you know, on the other side, and for this to happen, do you think U.S. equities also need to pull back, or not really? It looks like I mean the U.S. equities also for the first time in about 15 months or so are starting to pull back. Do you think that needs to accelerate for your view here to play out?
It looks like, because if we say the primary driver is the US bond yields rising, it will have an impact on US markets, and that is what is trickling down to our market. The geopolitical and other angles, I think, are the sideshow, which usually is news that follows the trend that has already reversed. But I think the macro factors are more critical over here than just the geopolitics that we are seeing. So I think US equities, which are at the center of that entire action, because that's where the debt and borrowing is taking place. And you know, we've seen a couple of things from central banks which were red flags. One of them is our own. I don't know how much importance has been given, but the RBI is saying that, you know, you can't trade in currency derivatives anymore. Is sort of a panic situation that you reach. You know, why would you suddenly curtail something that you started in 2008, unless you're perceiving that there's over speculation happening, which if I go by the open interest, there is no really sign of that happening, because open interest in USD INR futures has not really exploded to the upside where you should actually start panicking. In fact, it's the futures open interest in stock and index futures that is at 18 times the index, which is similar to what it was in 2018 and 2008, both of which were major tops for mid caps and small caps. So that is a bigger concern to me than currency. So if the RBI is panicking on the currency side, it tells you something that they are worried about on the global front. And you've similarly seen the Fed suddenly back off from the idea that they were to cut rates to saying that we need to stay higher for longer. You know, so it's sort of an acceptance that, you know, this is a very different environment. I think central banks try to use language to tone things the other way, but it didn't work. You know, their whole attempt to talk down interest rates sort of failed is what has happened.
Right. Although, Rohit, and we'll talk more about this, they can go the other way very fast as well, right? I mean, the last time the 10-year was at 5% was late last year. And that's the first time that, you know, the Fed, we started to hear them adjust their policy stance towards being more dovish. And that eased financial conditions quite a bit. And now we are here. So it's, you know, one can, but we'll talk more about this. We have to take a break, I'm told. So let's do that. Markets trying to come back, 22,040, so about 40 points above the 22,000 level with a 110-point cut. Stay with us. Rohit is with us as well. A few minutes to go to close. Okay, welcome back. There's about 2.5 minutes to go to close, and we're counting down 100 points lower. As I said, there's a bit of a recovery which actually set in. Rohit is still with us. Rohit, to that point we were talking about earlier, about, one thing is sure, everyone wants markets to be higher, especially in an election year. It doesn't matter Republicans or Democrats in the US. So if conditions were to become sort of a little under pressure, and the definition of what is under pressure has become very, very lenient now, right? 3, 4, 5%, and the market starts to think about when intervention will come next. So do you think we'll get to that stage very fast, or this is different?
So all the comparisons are being done with what happened in the 60s and 70s, which is the last inflationary cycle. And the question ahead of the Fed is essentially, should they move too soon, or should they wait? Because if they move too soon, you'll end up pushing reflation all the way back. So you'll end up with this 3% inflation going back to 5, 6, 7%, oil prices going back to $100 plus, and so on. And that is the risk, that if you move too soon. So that's, I think, the whole issue, that is timing. You'd really wait. Ideally, you'll wait for a crisis. You're right. And moment it looks critical, the chances are they step in and start buying bonds, and that sort of reverses the situation. And if they do it pretty quickly, then will you really get a very deep cut in the markets? And that is, I think, something that we'll have to keep on in our mind, that at any point of time, if there's a policy change, then we have to back off from what we are thinking. But can they really move that quickly on policy? I'm really wondering, because you're still not gotten full control. And on the other hand, this is slightly different from 2018, where they turned quickly, because you have government spending as the big handle. A lot of the impetus, a lot of the demand that you're seeing in the US economy is coming because of government spending. And that, how do you really get hold of that? So if you really move quickly in terms of cutting rates or doing QE and government spending, and that money is still circulating, you very, very quickly ignite inflation. And I think that is why they may not be able to move as fast as we would like to think, or as they have done in the past. They might actually have to wait for things to slow down in terms of economic activity before they can, move quickly to cut rates or go back to QE. And so I think that's the time.
Yeah. No, got that. Rohit, it's a pleasure speaking with you. Great explanation. Appreciate you joining in here for that. The market, by the way, is that we end down 100 points and, 3 big time off the highs of the day. The correction starting at about 1:30 p.m. But here's a special interaction. My colleague from CNBC Avaz, Lakshman Roy, is sitting down with the finance minister. So let's just cut across.
साउथ से लेकर के बिल्कुल सुदूर नॉर्थ ईस्ट तक, तो कैसा रिस्पांस मिल रहा है लोगों का?
बहुत अच्छा रिस्पांस मिल रही है, और ये बेनिफिशियरीज जो बोलते हैं वो मीटिंग में खुद आ जाते हैं. हमारे कार्यकर्तागण तो आते ही आते हैं, मगर बेनिफिशियरीज आते हैं. और अगर मैं कई बार कनेक्ट रखने के लिए प्रश्न के नाते पूछती हूं कि क्या आप में से किसी को उज्ज्वला गैस सिलेंडर मिला है, तो हाथ उठाते हैं. अच्छा. और घर मिला है, हाँ उठाते हैं. ऐसे करके मैं कल आपको जानकारी के लिए बोल रही हूँ, मिजोरम गई थी. अच्छा. और मिजोरम में भी एकदम लास्ट कोने पर, जहां म्यांमार के हमारी बॉर्डर है, उधर एक एरिया मारा ऑटोनमस रीजन बोलते हैं. जैसे असम में